Hello and welcome to Joe and Paul's Another Mining Podcast. With me, your host, Paul Harris from Columbia Gold Symposium and Mining Journal, and my co-host, Joe Mazumdar from Exploration Insight. Hello, Joe.
Paul, how's it going?
Very well. Okay, we're now just with Jack Lundin. We're going to President and CEO of Bluestone Resources. We're going to dig in a bit deeper about Cerro Blanco in Guatemala. The company recently announced a resource update, having also announced that it's going to change from an underground mining operation to an open pit operation. So, Jack, tell us a little bit about that decision.
Sure. First off, thanks a lot for having me. It's great to be here and a pleasure to talk about the Lundin Group of companies and more specifically Lundin Gold and now Bluestone Resources. But I did work for 4 years with Lundin Gold, and I was fortunate enough to be a part of the team that acquired Fruta del Norte from Kinross, and then advanced engineering, put together a development plan and finance the project, and then go through the experience of developing the project, which was completed on time, on budget, and is now exceeding its production guidance because it's such a strong asset, such a great deposit, and a very strong team that's operating it now. So we also, in parallel to making this investment and working on Fruta del Norte, we made an investment in Bluestone Resources, which acquired in 2017 Cerro Blanco from Goldcorp. And this is a project located in southern Guatemala. And really, for us, the focus shifted because Fruta del Norte was entering the operations phase. And then we had another project, being Cerro Blanco, that we needed to divert our attention to and put a project team in place there. So with the experience I gained at Fruta del Norte and the team that we established with that project, we did have the time and the resources to bring people over to look at Cerro Blanco, look at the engineering that had been done, the drilling that had been done, and see how we can maximize the benefits of this project. And that's where I am today. In January 2020, I joined as CEO of Bluestone Resources and moved from Ecuador to Guatemala to really focus on this new project.
And that seems to be something that successful companies do. They manage to keep their mine build team together and then transition them into another project. And the B2Gold's been very successful in that way. Equinox Gold being very successful in that way. And you've been able to keep some of the Fruta del Norte team together to take to Cerro Blanco and put to work there. I mean, fresh experience, teeth cut, etc. Hell of an advantage.
Yeah, no, that's exactly right. I mean, the focus is if you build a successful project, usually it's because you've got a team that works well together and you've got good people involved. And therefore, we wanted to make sure we maintain the key personnel for the project at Fruta, because once you go into operations, it's kind of a new skill set and a new group that comes in. So being able to keep most of that core team intact, again, working with G Mining Services to advance the engineering. This is where we really see the strength in the group and where we are today. We mentioned about being, more of a building group, whereas before in the earlier years, it was more part of deal making, advancing certain phases, but not bringing it from one phase to the next in any given project. But now we've got the capacity, the access to capital, and the team to work in any phase and through multiple phases. So that's where we're at today.
Okay, thank you. Now, most companies, when they're sort of advancing a project, they're looking at reducing capital. But you've changed the mining method and more than doubled the capital required to build Cerro Blanco's transition from an underground mining concept to an open pit concept. What were some of the sort of key elements of making that decision?
That's right. So at the end of February 28th or March 1st, we came out with a preliminary economic assessment on a brand new concept to develop Cerro Blanco. So previously, it was always contemplated as an underground high-grade development and operation. However, with the team that we brought in, with the success that we had in our drilling campaign, we drilled last year 15,500 meters. Most of those holes were drilled from surface, and we had continuous mineralization from surface. we really did understand this project always as something that was a deposit that was amenable to surface mining. But when I came in, we advanced with basic engineering for the underground concept. And as we continue to advance the underground, my understanding, the team that I brought in, and the existing team in place, we all started to look at this project and go, okay, is this really how you're maximizing the value of this asset? And when an operation or a deposit, when it has the geometry and the near surface characteristics, such as the ones that exist at Cerro Blanco, it's really supposed to be an open pit development scenario. You're accessing 3 times the amount of minerals, and you're able to do it because of the geometry and the spacing. It's a high grade deposit. You're also able to do it with a minimal footprint, even for a surface operation. So everything lined up from a technical standpoint to go with an open pit scenario. But then, of course, we had to understand if this is a project of this scale, if it's wanted in this part of Guatemala. So the next thing, once the technical boxes were ticked, then going and speaking with the government and the local stakeholders and the local leaders and letting them know who we are, why we believe this project to be better as an open pit or an alternative development to what was previously thought in the past. And again, we got enough support that gave us the confidence that this is the right thing to do. Yes, more capex, but more reward for that money that you're putting in.
Well, I mean, the just for our audience sake, I mean, both Fruta del Norte and Cerro Blanco are what we call low sulfidation epithermal systems with gold and silver. And Cerro Blanco is really at the outcrop is really at the top of the low sulfidation epithermal system. And so what we'll show you later in the graphics is these veins splay up to the surface, cut through the silica cap, and that was always drilled before to hit the vein. And then what they found, as Jack points out, and David Cass, who's the VP exploration there, was that there was some grade there that they would just be leaving. And then they thought, well, and let's be, honest about this. I mean, the original mine life, I mean, it's a high grade deposit with respect to underground, 8 grams, but it was a short mine life, 6 to 8 years. The open pit is a much longer mine life. And also, if you could talk a little bit about the technical risk, because the way I looked at it was that the underground had less permitting risk because you already had 1,000 ton per day permit that you wanted to expand, I believe, to 1.25. But technically, there were some issues with the high temperature of the underground, water and the temperature of the underground conditions versus the open pit that you basically de-risk some of those water issues, but the permitting risk goes up because you're changing what you're doing. You've got waste in that. So, can you tell us and our audience, basically how did you look at that? And I guess it was you having more comfort on the permitting risk side that you were comfortable that you would mitigate a lot of the technical risk. But
Yes, certainly. I'd be happy to explain that. And I'll start with the technical and then go into the permitting. But when we looked at this project, yes, there were technical challenges associated to the underground. I mean, it's a hot springs environment. So you're dealing with high temperature water inflows that we did have mitigation plans around. I mean, Goldcorp had already sunk in close to $200 million on the project. There is 3.5 kilometers of underground workings. There's a north and south portal that connect at about the midpoint depth of the deposit. So they have they've lowered the water table and they've developed in that environment. So it's been de-risked from that sense. However, when you're looking at the opportunity, and as you mentioned, the geology and how this deposit is formed, you are eliminating over 1.5 million ounces of recoverable by going with an underground, because the cutoff grade is higher for an underground scenario because it's a higher cost to operate. And therefore you can't go after the lower grade minerals that encapsulate those high grade veins. So, from that standpoint, we had mitigated the underground challenges that were associated to the hot water. However, going with an open pit, because it becomes a larger project and because the water inflows are not as significant, especially in those first 2 to 3 years, because the underground workings are, already going to be our dewatering level for those first 2 to 4 years of mine life. So we're essentially got a dry mine for the first several years, and those are the payback years, right, where you want to produce as much as possible. And on top of that, we'll be able to focus on a much more rigorous training program for the local communities, because you're going to need to employ a larger workforce, and it's less technically challenging working at an open pit, open sky, rather than underground, high temperatures. You need a very highly skilled and smaller team in order to go in and develop those stopes.
And
So
that's an important aspect, just sorry to interrupt, in terms of employment, because before I remember you were talking about that you would have to import people in and then slowly train them in the underground, but by then the mine life might be done. But here you can actually, engage the local stakeholders and say, well, those jobs are actually your jobs, not for anybody else.
and that is a very big component as to why we believe that this is the right way to go about developing Cerro Blanco, because we can, through our training programs, training for construction and training for operations, focus much more on local employment and making sure that the local stakeholders are the ones that are benefiting with the job opportunities, because at the end of the day, that's a very important factor for us, being able to employ the local communities, and therefore with the open pit you can do that. Another thing, when we talk about permitting, we already have our mining license. What we're amending is our environmental management plan, which would trigger a new environmental license. So we have gone through the process of dealing with the Ministry of Environment for amending existing permits in the past, and therefore we're comfortable with the process. We understand what what it takes. You have to fill out the terms of reference. There's a lot of information that's required, but once you do that, you submit it to the authorities, and there's a review period. There's also a period for observations and clarifications that need to be made, and then if you do it the right way, you can receive the permit and move into the next phase.
So, I mean, we talk about permitting risk, which you seem, you're happy about in terms of absorbing because of the new government and your ability to engage stakeholders. We talk about technical risk, which probably you guys are more adept at handling because you're bringing in the team from Fruta del Norte using G Mining. And so for people outside, G Mining is a consulting firm that builds projects. They built the Marion deposit for Newmont in Suriname, I believe. And again, that was on time, on budget. It's the same with Fruta del Norte. They also did the feasibility study for Exploration Insight subscribers' knowledge on the Northern Ontario project that Equinox just bought, which was Hard Rock. So they've got quite the reputation for building and bringing things on budget. And so the fact that you're using reputable consultants and bringing in the Fruta del Norte people, that should help you with the technical risk. But then we move on to, okay, the capital before was, I remember, 150 to 200 million ish with working capital maybe. And now you're going to 550, 600, going from a 1.25, 1.5, maybe 1,000 ton per day underground to a 15,000 ton per day open pit. So, how does financing risk play a role in this? And you talked about payback, which is very important. Like, how does that, like, how are you contemplating funding this thing? Because as you were saying before, capital intensity is important, and that's a lot of money for Guatemala. So, how are you looking at the financing risk right now?
So for us, I mean, when we look at this project, yes, it's a bigger capex, it's a bigger project. The payback period with today's commodity prices is going to be less than 2 years. And therefore, when you look at a project, I mean, of course, if you're going to have bigger capex, there's got to be more money to be made, more free cash flow generated, and the mine plan has to be robust, meaning that you're front end loading the production, right? So for us, getting into that high grade zone as quick as possible and bringing production up to above 300,000 ounces of gold, above 1 million ounces of silver per year is what justifies going for a bigger project with larger capex. Again, and I think you heard it from my dad, I mean, we want to focus on larger scale projects because those are what generate more returns and more benefits for all stakeholders that are involved. And with Cerro Blanco as an open pit, larger project means it's more of a focus for the group. So we can really focus on getting the most attractive financing plan in place. And I think we'll still be targeting a similar financing strategy that we had to the underground, where around 60 to 70% will be focused as a debt facility from a syndicate of banks, most likely a syndicate of banks or group of banks that we've worked with in the past on various other projects. So again, leveraging on relationships that we already have. And then now that we've got about 10 million ounces or more recoverable of silver, there's a serious potential for a stream to be put in place for that, the first years of silver production. So we'll look at a combination of debt, equity, and stream. But first, we're right now working through our feasibility study, trying to bring down that initial capex number if possible. And then from there, that's our bankable feasibility study, which we'll be completing towards the end of this year and releasing the information of that feasibility study likely in January of 2022.
Okay, just to get an idea in terms of, have you seen the last uh, couple of financings that were announced to the market, like Rio 2 for the Phoenix open pit gold project in Chile, in northern Chile, and then also for Marathon Gold on Valentine Lake. When you see what other people are doing, does it sort of change? Like, okay, this is the market. Do I have to change what I think, or are you sort of at, that's fine what they're doing, but I'm still going on my path?
No, I mean, we have to take note of what's going on in the industry around us and how projects are being financed, of course. And so we take that into consideration, and it does, give us more information and see how we can approach things, see what kind of cost of capital other companies or other projects are getting. But then, of course, Joe, as you know, I mean, it depends on jurisdiction, it depends on the size of the project, it depends on, who the financing groups are that are involved. And so there's a lot of factors that differentiate one project from another, especially when you're talking about financing strategies. But of course, we do, we have a corporate affairs and investor relations department. We have a CFO who's working, his job is to make sure that we get the most attractive terms as possible to finance our project. And, I think for us, what we've seen out there is good, but our existing strategy still holds firm.
I mean, just lastly for me, I mean, well, I don't know lastly, but with respect to, like, is there a no-go zone? Like we see Rio 2 put a hedge on its gold production, maybe because they looked at their equity position and just look, well, I don't want to raise 50 million US at this price, which is, more maybe a 2-year low or something like that. A Bluestone is trading like, I don't know, zero point 0.2 to its net asset value in terms of the new open pit valuation. Like, how do you see that? And do you say, okay, I'm never going to do a stream on my main product, silver is okay? Do you look at, I don't want to touch this, or how do you sort of look at that and say, okay, that's somewhere I don't want to go?
I think, we're not really in the business of hedging. We haven't done that in the past, and it is a big gamble, and it's tricky to justify that because we have a reputation of building projects. I think for us, we can access more secure means of financing our project, and therefore we would typically stay away from hedging. But again, I mean, you have to be flexible and you have to keep all options on the table when you're looking at advancing a project, both technically, financially, socially, environmentally, all of that. You really, we're in the planning phase, right? We're trying to de-risk the project. And I think that for us, we won't look at that strategy for financing, but if it makes sense at the time, then you can't just automatically throw it off the table. But for us, right now, single asset player in Guatemala, looking at a $500 million capex project, for where we're at, I think a debt facility and likely some equity and maybe even a stream makes the most sense.
Okay, but the stream on the byproduct, which would be the silver.
Exactly. Yes.
Okay, all right. Yeah, Paul, you got another one here?
Yeah, the more of a sort of strategy question. The Lundin Group has got three gold projects in South America, Ecuador, Guatemala, and Brazil. Three different companies. So an investor wants to invest with Lundin Gold, sorry, with Lundin Group in gold. It's got three choices. To what extent are the companies competing? To what extent is there perhaps at a higher level the desire to kind of merge some or something like that? I know, speaking to sort of Ron Hochstein, President CEO of Lundin Gold, they want to take Fruta del Norte as the basis to grow and become a multi-asset company. Bluestone's a single asset company. What's the bigger picture here?
That's a great question. So really what we focus on right now, especially when we're in the project execution phase. So with Cerro Blanco, I mean, it's tricky enough to advance a mineral resource project and go from one phase to the next. And that's why the Lundin group of companies, most of the companies start out as single asset companies because we can have our own management team, our own board of directors, and really a full focus on that single asset to advance it. Um, Fruta del Norte, we took that approach, we used that model, it worked really well. And now, I mean, they've got another project to expand the production capacity at Fruta del Norte. So they're still working on optimizing and improving and actually growing the production capacity of that asset. So again, being able to do that as a single asset player, it means that they can really hone in and put their energy and focus where it needs to be. So for Cerro Blanco, we're focused on staying as a single asset player until we can get Cerro Blanco into the next phase. And at that time, if it makes sense, given the climate, the commodity price, the industry as a whole, what's going on, then of course at the end of the day, we look at this as a business to create value. So things can happen and mergers can happen or acquisitions can happen. We don't throw that off the table. But right now, Cerro Blanco, for an investor looking at this project, as Joe was saying, we're trading at around zero point 0.2 to the net asset value of our open pit project. And considering that we just tripled the value of the project by going from an underground to an open pit, we do see that there is near-term upside potential on the share price for certain milestones, like showing the results of the feasibility study, and submitting our application for the new environmental license, receiving that environmental license, getting into the construction phase. I mean, all of these are significant catalysts that we're hopeful will happen within the next 12 to 18 months. And then you get another re-rate once you get into production. So, if you follow our story, see the advancements and see the progress that we're making, the market will soon catch on and we'll see share price appreciation, no doubt. And that's why I'm spending my time in Guatemala fully focused on advancing this project, because there's a lot of value to create here.
All
Okay,
right.
that makes a lot of sense. You're focusing on getting the project over the line, getting it built, and then see what the lie of the land is in the market in a few years' time.
Yeah, 100%. And again, I mean, there's so many things that happen in the industry, in the global markets, and things that change, of course. But we try and keep it simple by looking at projects that can generate returns in any environment, in any price environment. So we run our economics at Cerro Blanco between $1,500 to $1,600 an ounce, around $20 an ounce silver, and that still generates very robust numbers. So if you use today's commodity prices, I mean, really the economics are exceptional. And this is a real project. We're putting real numbers in place. We're not trying to add fluff to this story and make it look better than it really is. Like, we want to be able to deliver on what realistically this project is, and therefore we've got really an exciting project on our hands in Cerro Blanco.
Well, I want to do also point that out because you can sort of the telltale signs of somebody that actually wants to build the project, and then this resource update, didn't add a lot of ounces of measured and indicated. And for our audience, there's three categories of resources: measured, indicated, and inferred. Inferred you cannot use in a feasibility study. You can't convert that to reserves, but you can measured and indicated. And measured is a higher grade of certainty than indicated. And what you see in the resource update for Cerro Blanco is that the higher proportion of resources now that are in measured, and you don't see a lot of development projects with that amount of measured in terms of their entire population of M&I in the higher category, which for me is speaks volumes about what they want to do. But also, you could speak to this, Jack. It makes this better for potential lenders to look at it and go, wow, you've got the term of my loan in measured.
Hmm.
Do you see that being helpful?
Yeah, 100%, right? We got the mindset of building this. So what do we need to do? We need to ensure that we understand where the high grade mineralization is in the deposit, tighten up the spacing of our drilling, really understand in those initial years of mine life where the money's going to be, and so we can go after the high grade zones. Um, we weren't really targeting step out holes with this drill campaign that we just completed in the first half of 2021, but there is also significant upside potential here with in our existing light mining license for potential discoveries. Glamis, which was the owner of Cerro Blanco before Goldcorp acquired Glamis, had some targets that they actually drilled out to the north. There's about a 2 kilometer northerly trend of mineralization that we're seeing here. And so for us, the more exciting potential is to add meaningful ounces through satellite pits. So we will put together an exploration campaign, likely in the beginning of 2022, so that we can look at going after other shallow deposits in our surrounding area, and that might be able to bring material, give an opportunity to bring material to the Cerro Blanco processing complex once we're up and running. So I think that again is what adds some more flair to this story. It's not just Cerro Blanco; it's kind of what's around us, and that's also, Joe, you know better than I do about how these deposits form. They tend to form in clusters, and therefore to find more ounces through satellite deposits, I think would be another game changer for us.
Yeah, and full disclosure, Exploration Insights has a position in Bluestone. But I mean, also full disclosure is that they have a really good Vice President of Exploration, David Cass, who's got a lot of international experience, and he's basically going to be running the exploration program as he did a lot of the drilling for the resource that's already happened. So with that, Paul, do you have any more questions?
No, I think it's been a really good discussion. Thank you.
Great. Okay. So we'll wrap it up there. Jack, thank you. And Jack and his father were basically attending from their roots back in Sweden. And so we thank you for joining us, and look forward to seeing the progress of Bluestone over the next 12 to 18 months. Thank you very much, Jack.
Thanks a lot for having me, guys. Appreciate it.
Great.
Jack, thanks, Joe. And join us again soon for another mining podcast.